Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome back to Galaxy Brains.
Thanks for having me.
Man, so you were off last week, and has stuff happened? I know in crypto there's been stuff.
Yeah.
But let's start just with markets. I mean, what really has happened over the last couple of weeks? I mean, DeepSeek, I think the last time we talked, we were really talking a lot about the DeepSeek AI news.
Yeah.
That seems to have basically been absorbed now by the market. I know that like the AI stocks are basically back.
They are.
What's the new thing that markets are thinking about?
So they're not thinking about tariff risk as much.
That is interesting.
And, the market has kind of gotten desensitized to some of these tariff headlines, largely because they've realized that it's a negotiation tactic for the most part. And so you've seen a lot less sensitivity to the tariff headlines. And then I think you've seen a renewed focus on kind of the ultimate end state of AI and really like where does the value accrual happen once you get to the end state. And thinking through that, I think the sector that makes the most sense to me right now is probably like healthcare, right? Like if you can...
For disruption and adoption of AI, you mean?
For uses for AI, right? In terms of diagnosing things, in terms of, coming up with treatments, new medicines, and analyzing like a person's genome and things like that. And so you've seen like healthcare related AI names up as a collective about 20% on the year, which makes them the best performing like AI subset. And so I really, I was watching this, the current Alibaba CEO, he was giving a speech at like, I don't know, maybe like a World Economic Forum or something like that. And he, was speaking about like the massive spend that these U.S. companies have had. And his whole point was like, you really want to focus on like the end outcomes of AI, not like kind of
the build out of
the right. And so like once you've got, a trained model, right, like you want to focus it on solving like real world problems and like real solutions.
That's
and,
where
like,
you should hunt for investment opportunities.
Correct.
Yeah.
Right. And so that's kind of how I'm thinking about, AI at the moment. Because otherwise, like you look at, some of the Magnificent Seven names, like the valuations are really high and they're, these companies are priced like they're huge growth companies in some instances, but they're, worth trillions of dollars. They're not startups or like, early stage, mid stage and stuff. And so I'm a little cautious on kind of some of the more established AI plays and a little bit more optimistic on some of the healthcare developments at the moment. But by and large, you've had, in terms of the fixed income market, you've had a pretty big kind of retracement since the hot CPI print in January. A lot of folks ascribed that, high print to seasonal factors, to, wildfires in California and things of that nature. And so you had a pretty big whipsaw in bonds. Where they sold off a lot on CPI and they rallied subsequently. And then since then, they've actually sold off even more. So not even more, but they've sold off again. And that's largely because there's a ton of IG issuance that's going through the market this week, in addition to a lot of U.S. Treasury supply as well. You had a 20-year auction today. And I think you had like 18 investment grade bond deals that happened yesterday. So there's still a ton of like supply on the fixed income side of things. And then in terms of other data that's notable, you've seen a pretty material slowdown in kind of housing, particularly like new homes. Mm-hmm. And you saw that yesterday with the NAHB sentiment number that came in very soft.
So a slowdown meaning even fewer sales?
As in it's home builders are feeling pressure, and they're not feeling as optimistic about market conditions for the new homes that are coming online or that they're trying to sell at the moment.
Slowdown in demand.
Yes.
So even
because affordability is like
I was going to say affordability is bad.
Yeah.
The turnover has been extremely low.
Yeah.
So people don't want, and the rates are still high.
Yeah, and it's also like it still makes more sense to rent than buy
in almost all financial.
Yeah. So like if you're thinking about like properties from an investment standpoint, your investment yield's like sub 5% now, right? You're better off in treasuries than like buying a house and renting it.
Yeah.
And then you also have a ton of new supply in terms of apartments that are coming up.
All over the country.
And rents are going down.
All over the country, there are these walkable mall apartments being built and have been built over the last like 15 years. They're everywhere, right? Where it's literally like a fancy outdoor mall with apartment buildings on top of it, right?
Yeah, no, in a lot of metropolitan areas, they have a ton of that.
In the South, in the Midwest, in the Southwest, like I've seen this everywhere. In Vegas is everywhere.
Yeah,
like,
so I mean, just to give you one anecdote, I think Apartments.com releases a data series. It might be some other apartment website, but their vacancy rate was almost 7%, and that's the highest it's been in a really long time. And the other thing that's kind of was sticking out to me, I was looking at a chart today of 90-day delinquencies in credit card balances. Right, they're almost at 12%, which is like talking about like 2009, 2010, like post GFC era levels. And so I think what you're starting to see is, like a little bit of a slowdown in pockets of the U.S. Economy. And then the other thing that, I just keep harping on is like the government's like cutting jobs, right? And they're cutting spending. And like that's a huge part of the U.S. economy. And I think in terms of like the areas you have to watch on a go forward basis, like it's literally the labor market, because if you think through the labor market trends of last year, a lot of the job gains were driven by the government sector.
Yeah.
And the weakness was actually in private sector jobs. And so if you're going to have a slowdown in government hiring, in addition
let alone cuts.
And in addition to like a softening labor market on the private side, like that doesn't really bode well for the economy. And so,
well, it does make rate cuts more likely, right?
It does.
Because unemployment numbers would go up. Yeah.
It does,
but
again,
it should
also
maybe help inflation. If people have less money, they stop spending as much.
Yeah.
So, it's
but at the same time, like
we really had it great with that like multi-decades of like even full decade of like 0% interest rates and no inflation, basically.
Yeah.
That was a rare moment, because now like once you get into this tricky balancing act, like one goes up, the other has to come. Like it was wild that they were both low.
Yeah, no, fair enough. But then it's like, what are the dynamics now if interest rates come down, right? Does that mean that there's going to be a ton more housing supply, or is it going to be offset by demand?
Yeah.
But it's like, a lot of folks are like, I don't want to sell my home because there's not really good buyers out there because the housing affordability is low. But if mortgage rates drop, the housing affordability comes up. And so, you may be more inclined to sell your home because you can afford to buy another home easier. And you don't have
and
to
that
give
could
up
also
a low,
put upward pressure on inflation.
or it could put downward pressure on home prices because more supply comes in. There's so many like weird, kind of
so what's
factors
always so
at
funny
play.
to me about like these blunt instruments that the Fed has, like the pure, we call the overnight rate, the base rate that they set. They do have other tools like their balance sheet and stuff, but mostly it really is just this main rate tool.
Well,
and
it's that and kind of, forward guidance in a way, right? In terms of, the projecting out like their Fed policy path, projecting out kind of where they expect data to be and terminal rates to be, et cetera. And so it's really like part of keeping inflation under control is
the
keeping
forecasting.
Inflation expectations under control.
That's true.
So like, if people think prices are going to go up 10% next month, they're going to, front load their
and that
consumption.
could cause it to go up this month. Yeah.
Yes.
Yeah, you're
and
right.
So like it's very tough. And then moving on to crypto, though, an even tougher market. I think there have been some very cringe aspects of crypto that have been exposed as
specifically the Libra token and associated fallout. And
Correct.
Right, and we sent our clients a note about this earlier this week.
Great note.
Thank you. It turns out the author is speaking at this exact moment. I wrote it, is what I'm saying, to make clear to the audience. But it really laid bare not just really like the evolution of the meme coin market and maybe therefore all of crypto, because when it's Dogecoin, it really is a joke. It really did have a fair launch. It actually has its own blockchain. It actually isn't literally a meme coin. It is an L1 gas token for a blockchain. And then you have things like Bonk, and that is also a very fair type of
Yeah.
thing, and it is sort of a meme, literally, or like Pepe, or like, these ones are actually
Shiba Inu,
coins
yeah.
based on memes.
Yeah.
But then you get into this situation with like Libra, where that's not a meme; it's affiliated with the president token.
Yeah.
But it also effectively rugged in an extremely visible manner that also it made people. I mean, I think everybody should know and does know that, like, if you don't know, then you might be the exit liquidity for something like a meme coin.
Yeah, exactly.
Right? Everybody, I think most of the people playing in the quote trenches are aware that, like, this is a parlor game of gambling, and we're not opposed to people. I mean, I also believe in
Musical
freedom.
chairs.
But this really showed that there is actually insider manipulation in some of these. It looks like there was in this one.
Yeah.
And it makes people wonder. And that really caused a real disillusionment in
No,
broader
absolutely.
crypto.
Yeah.
One that was kind of already around for the other reasons we've talked about, the show me market.
Yeah.
But kind of like accelerated it a bit. It felt like it pulled it forward.
No, absolutely. And at the end of the day, like when you're in such a speculative asset class, like sentiment like trumps a lot of things. And the moment you get poor sentiment on something, like it makes it tough, to ever recover, really, right? And I the way I think about crypto is right now is that it is a kind of a show me market, right? Like show me, user adoption, show me TVL on DeFi, show me real institutions showing up, etc. And like I really think those are the things that matter most on a go forward basis. And I think there's less appetite for some of the riskier aspects of crypto, particularly because folks, at least recently, have gotten burned. And there's a pretty significant wealth effect to all of these memes and alt tokens coming down in value. And so I think those aspects of crypto that are most adjacent to that memes or ghost chain stuff aren't going to perform.
Yeah, I agree. And I was asked on FinTech TV last week at the NYSE that what do I make of the delta that has emerged between retail and institutional sentiment? And their premise of the question was that institutions have never been this bullish. We've never had as many institutions that like Bitcoin. But like on the feed, it's like all despondent. And I was like, what I make of it is that Bitcoin has product market fit. Stable coins probably do too, but their numbers stay flat technology, so you can't like invest in them.
Yeah.
You can do like venture investing and things in companies that do them. But that the rest of it is really, I mean, dude, ETH got, how close did it get? It was still 50% away from its all-time high.
Yeah.
So like, and that was at like 3,600, right? So like the rest of I mean, Solana obviously made a new all-time high around the Trump coin launch, but is down almost like 40% since then, right? So like, whereas Bitcoin's just, $96,000. So like, it does feel, and there was, and I say this because there was a response on the back of some meme coin rug. I don't even know if it was Libra. Some account on Twitter was like, just why can't I just find a coin that's fair, that's transparent, that has a big community where the founder won't rug? And the top reply, like super ratioing it, was, and I'm going to paraphrase because it used vulgarity I don't want to use on this show, but it was Bitcoin, you idiot, right? Yeah. And the reality is a lot of like retail and like crypto Twitter is like under allocated or no allocation to Bitcoin. And it's more of the institutional players that have been getting interested. So I wonder if that's what's keeping Bitcoin at effectively unprecedentedly high dominance in the market during what is ostensibly a bull.
No, I think you nailed it. There's product market fit, with institutions and Bitcoin. And yeah, I mean, the product has never been better. You got a liquid ETF, options market on the ETF. You got CME futures, you like
better custody than ever before.
Yeah. And transparency. Like this is it.
It's a real thing. You see the Czech central bank governor, I don't know if that's the governor or one of the governors, I don't know the composition of the Czech central bank, saying specifically Bitcoin is different than other crypto assets and all banks should study it. And studying it doesn't make us weak, it makes us strong. Do you see that? He tweeted this.
I did not see that, but I totally respect that point of view. My one counter to that though is like, to don't fix what isn't broken. And
You don't think fiat money is broken?
no, but like, what's that central banker's alternative?
No, I agree.
It's gold,
Well, yeah,
right? And how has gold been performing?
really well.
Insanely well.
I mean,
Right.
gold on an absolute basis is up more than Bitcoin this year.
Yeah.
Yeah.
Like risk adjusted, like liquidity, like it is performing. And so, I think there's a lot of folks that sit in the monetary debasement camp that, weigh their options about how to play that trade.
You could do gold.
You could do gold.
You don't need Bitcoin for that. You
At
might.
least
But yeah.
you might, right?
Yeah.
And I think any prudent investor like diversifies.
No, I agree.
Right?
To be clear,
But-
I do prefer Bitcoin over gold, especially in a long term. I think it
Long-term,
will really
absolutely.
fit there as
Yeah.
exactly a debasement hedge. But yes,
right
if you're
here,
a
right
bank, central
now-
banker or an institution,
Yeah,
gold
I mean,
has
you're
been-
probably thinking like, shit, I should have bought like 6 months ago.
I
Shit,
mean, wasn't
should've
gold up
bought
like 30% last year?
Yeah,
That's
and it's up more this year.
I know that's a
Not
crazy
more than
gain.
30%.
Yeah, but like it's
up.
still going up from
Correct.
there. But that's a crazy gain for something that's a stable value kind of idea.
Yeah, I mean, it's worth $20 trillion, one of the largest assets in the world.
People just love gold still. They
Yeah.
do. They do. They
And
like it.
like-
They like the way it looks. It has the metallurgic properties that are super conducive to use cases like money, right? It's scarce, but not so scarce that it's like too hard to find. You can get it, but it takes work to get it. It can be melted. It doesn't rust. It can be melted and reshaped. Doesn't really rust. It's extremely durable, but also malleable. Like actually, there's a metallurgic reason why it was gold and not copper, or gold and not diamonds, or gold that became this emergent monetary phenomenon, and people still like it. They really do. It's been a weird thing, man, watching how well the gold bugs were finally right last year, basically, after like 15 years of being
Yeah.
wrong.
No, absolutely.
You got to feel for them if you were only in gold, if you're like a gold
I
maxi.
know. You
missed
keep
out on like the
watching
best.
tech stocks go up. You're
Yeah.
like, ah,
Yeah.
ah.
You finally got your gain. All right, well,
Yeah.
let's leave it here. There's lots of interesting stuff happening. I think your points, by the way, at the beginning of the talk about tariffs, it really is interesting. They know Trump's coming out like mega hard line, and it has already shown. First of all, it's shown that that's worked for him. He's gotten concessions. He's also shown that he's willing to back off if he does get concessions.
Yeah.
So you just gotta like sit back and watch and see what happens.
Just get your popcorn ready.
Beimnet Abebe from Galaxy Trading, as always, my friend. Thank you so much.